The real estate market is way up, but hey, so is the cost of living and so are interest rates. There's a lot of people around the country, due to these factors that are beyond their control, that are starting to have a hard time making their monthly mortgage payment. If this is you or anyone you know, let's get into it. How you doing? I'm Werenka. I'm the broker owner here at M1 Realty. We're the largest real estate firm in the city of Ferndale, Michigan. And we've got an all-star team of agents who are ready to help you, whether you're looking to buy, sell, invest, rent, whatever you need, we've got you covered. So this video is a really important topic to me, and I've got extensive background in the foreclosure market, how we deal with banks, what banks are looking to get, and how we can work with them to make sure that you stay in your house if that's what you want to do. So I've been in the real estate business for 19 years at this point. I got licensed in 2003, and immediately after I got my license, the broker that I was working for at the time had a growing foreclosure department, and I immediately started working in that department simply because as a new agent, I wanted to do whatever I could to give myself as much knowledge as possible and be in as many aspects of the real estate business as I possibly could. And then obviously over the course of time, by 2007, 2008, like that was basically all we were doing was listing foreclosure properties because the Great Recession and the housing market completely tanked. So needless to say, I've got as much background as probably anybody else in this market, probably more than almost every other agent, in the psychology that banks use, what they're looking to gain, how we can help homeowners in order to not have to get foreclosed on. And I guess first things first, it's something that we all have to accept. There are going to be foreclosures starting again in this market. It's inevitable. It's going to happen. But I will say this, I don't see it being anything like it was 15 years ago, and we'll talk about why, and we'll talk about your options in this video. But before we get into it, I'd really appreciate it if you'd like this video, subscribe to this channel, and most importantly, share this video out to anybody that you think is going to benefit from it. I put out relevant videos every week that kind of reflect what's going on in the market, and sharing these videos helps me get in front of people just like you who are going to benefit from exactly what I'm talking about right now. Now, the most important thing here is if you are having a hard time making your mortgage payment, or you're getting to that point where it's getting to be a little bit tougher, you're not sure you're going to be able to continue making your monthly payment, you definitely have several options available to you. We're going to talk about all of those in depth. And then obviously this is a sensitive topic, so if you can always comment down below and I'll answer any questions that you have. But for something like this, I get it if you don't want the whole world knowing your situation. You absolutely can call or text me anytime. My direct line is 586-491-5622, or shoot me an email at dwerenka@m1realty.net. And I promise anything that you send me is going to be kept 100% confidential. Like, this is, what I've been doing for a living for 2 decades almost. I absolutely will keep your private information private and work with you one-on-one to get you on the right track. Now, the most important factor in this situation, if you are getting to the point where things are getting a little tight financially, the faster you act, the more options you're going to give yourself. Now, the easiest option that you have, at least from a get out from underneath a bad mortgage standpoint, is just to sell your house. I mean, home prices are up 42% nationally since the start of the pandemic. So basically almost everybody in this market now has a lot of equity in their home. And as of right now, especially in the Detroit metro market, we haven't seen any kind of a price dip. We haven't seen an elevated number of days on market for homes. Inventory is starting to creep up a little bit. That's a good thing, actually, since we were so low on inventory that we could absorb triple the inventory that we have right now with no problem. And really, realistically, the days on market probably wouldn't even go up much at that point. So now is definitely still a very good time to sell in this market. And obviously I get it, you could sell your house and get out from under your mortgage, but then what are you going to do? The rental market's crazy high as well. Maybe you don't want to move, for whatever reason. Like, I absolutely get that. So there's plenty of options as well to stay in your house and not have to sell. So let's talk about those, and we'll go from there. Now, the first thing that comes to mind for people that are in that situation is just a forbearance. Now, those aren't as prevalent as they were at the beginning of the pandemic. So I know the CARES Act was the kind of like the federally mandated forbearance program that ended about a year ago. But that being said, working with your lender one-on-one on a case-by-case basis, you more than likely will be able to work out some kind of a forbearance plan with them. Now, most lenders, they might still have an actual department dedicated to forbearance, but if they don't, you probably want to look into their loss mitigation department. You can contact them either on the phone or online. Almost every lender will have a drop-down menu or a phone menu to get you directly to that department. Now, for this option, and actually for all of the other options we're going to discuss, you're going to need to supply them with information. They're going to need to see, if you have a hardship, as far as, financially, you're going to need to just document everything. They're probably going to want to see bank statements. They're just want to know what your situation is. And generally, for the most part, it can be a pain. I'm not going to lie. But for the most part, these banks want to work with you. They don't want to foreclose. They want to keep you in that house and get you to a point where you're back on your feet making your regular monthly payments. So, I can't speak to every bank, and I certainly can't speak to every, call center person that you're going to talk to. But generally speaking, they're not here to give you a hard time. And I'll briefly also go over what a forbearance is in case we haven't really delved into that too much. Now, all that means is essentially your lender is going to let you hit the pause button on making monthly payments. There's a couple of ways to get out of the forbearance period, but generally while you're in that forbearance, you're not going to get penalized. They're not going to report you to credit agencies. You just don't have to make that payment, whether it's 1 month or 6 months, or with COVID, I think it was 18 months. Like, people could go a year and a half without having to make their monthly mortgage payment, without really incurring any penalties. Now, there's two ways to get out of the forbearance. The first one is just you make up the payments that you miss. So in that instance, it definitely is in your interest not to spend that much time, with a forbearance. Like, if you can get your finances in order, get everything back on the right track in like a month or two, that's gonna help you out the best, because those payments still accumulate. They just get deferred. So you're either have to, however many payments you miss, you need to make those payments right back up, or modify your loan. So let's talk about loan modification. So with option number 3, loan modification, there are a few different ways that we can do that that'll help you as a mortgage holder. And again, every lender is different. This is something you're going to have to work out with them. And I've done this for clients before, and even people that aren't clients, I've definitely helped them kind of negotiate with different banks. And every bank has their own internal policies, their own way that they prefer to do these workarounds. But at the end of the day, the majority of them, the majority of people that hold mortgages for people all over the country, would rather modify the loan and come up with a way to keep people in their house and keep them making payments than they would to foreclose. So one of the ways that we can modify your mortgage is just to extend the length of the loan. So whether that's through a forbearance or just a modification itself, maybe instead of, maybe you've got 15 years left on your mortgage, but your payment is you're just not able to make it. Maybe if your payment was 25% less, then it would make it easier for you to make those payments. That works for you financially, and as long as your mortgage company is in agreement with you on that and allows you to do that, they can do that just by extending the life of the loan. So instead of having 15 years before it's paid off, maybe now it's going to be 19 years. But that extra time allows you to have your payment at a point where it's comfortable for you to make, and it's something that you can consistently make every month, and not have to be stressing and worrying about where the money's going to come from for your next mortgage payment. That's a win-win. So a lot of the time, if there is a proven hardship, your mortgage company will definitely work with you. Another thing they could potentially do is lower your interest rate. So especially if you didn't refinance in the past couple years with the refinance boom, most people that have had their mortgages for any length of time definitely are paying a higher interest rate than what we had been seeing for the past couple of years, and probably even higher than what we're seeing right now. So it's hard to say what the average interest rate is, but as of June 2022, let's just call it like 5.25% for a 30-year fixed conventional mortgage. And obviously your credit, your cash reserves, all that kind of factors into what your actual mortgage rate's going to be. But generally speaking, that's a good place to put it, is about 5.25% for a 30-year fixed mortgage. Say your mortgage right now you're paying 7.5%. Say you've had your house for 15 years. That's about where the interest rates were 15 years ago. And now, maybe they will just, without even really having to refinance, maybe they just take it upon themselves to lower your interest rate down to, 5.5%. And that's going to save you a lot of money on your monthly payment. So unless you come to them and request that and provide them with the documentation that they need, they're not just going to take it upon themselves to do that. So all of this stuff is going to have to be kind of proactively done by you. Your mortgage company is never going to come to you and say, hey, would you like a lower interest rate? Because if you don't need it, they're going to keep raking that money in. Option 4 is a short sale. Now, I don't anticipate too many people are going to need to exercise this option, although it is a possibility. And again, this has more to do with just the how average sale prices have exploded over the past couple of years. There's very few people that are underwater on their house now, and that's really the only place a short sale would come into play. That's when you owe more on your house than what it's worth. And when that's the case, you have to come again. You go to the loss mitigation department at your mortgage company. You explain the situation. They have to agree to allow you to sell the house for less than what's owed on it, and then the mortgage company basically takes a hit on the difference and writes that off. Now, the art of negotiating a short sale at this point, since we haven't seen any in 10 years or haven't seen too many of them, is kind of a lost art. Although I still maintain really good contact. Actually, my title company that I use for most of my closings, the processor that I work with one-on-one on all of my deals, was my short sale negotiator when I had to negotiate short sales. She still knows exactly what she's doing. She's sharp as a tack as far as that goes. So any advice that you would need to enter into short sale negotiations, I can definitely loop you into experts as far as that goes. Like I've never personally had to negotiate a short sale directly with the bank, because I've got the people that do that for me that I absolutely trust. So I'm happy to extend that to you guys, so that you're making sure that you get 100% the best negotiating and representation that you deserve. Option number 5 is a deed in lieu of foreclosure. Now, this is kind of rare, but it's definitely something that's available to you. And what that is basically is, instead of if it's just not going to happen, the bank won't renegotiate your mortgage payment or your interest rate, or you're just not going to be able to keep that house. It's just not feasible. It's not going to happen. You can do a deed in lieu, which basically you're just deeding the house back to the mortgage company without them having to foreclose on you. So there's definitely some implications to your credit. It's gonna ding you as bad as a foreclosure, pretty much. But the credit agencies tend to look on that more favorably than a foreclosure, just because you were being proactive about it. It's saving the banks and the mortgage companies thousands and thousands of dollars. They're not going to have to hire a lawyer, proceed through the whole foreclosure period, lose 9 months or a year of getting payments on the house. Paying all those legal fees, paying court costs, the whole 9 yards. They're saving all that money just by you being proactive and just being like, listen, it's not happening anymore. I can't keep this house. I'm just going to sign it back to you, and we'll go our separate ways. So definitely going to have an impact on your credit, but it's viewed more favorably than a foreclosure. And I should say, going back to short sales as well, that will ding your credit as well. but it's not nearly as severe as a deed in lieu or a foreclosure. So if you do a short sale, you're probably going to get dinged for 100 to 150 points, and that'll drop off usually after a year or two on your credit report. So where a foreclosure will stick with you for, I think, 7 years. So definitely. That's our last resort. We're only, going forward with foreclosure if we absolutely have to, or deed in lieu. Hopefully these other options that we have will be able to, solve any problems that you have before we get to that point. And then option 6, if all else fails, you can look into a strategic default. Basically, you're going to let the bank foreclose on you, and the way that works is essentially, you're going to lose the house, so you just stop making payments, and you can just bank that money away that you would normally be using to make your monthly mortgage payment, and just save it until the whole foreclosure process sees itself through. For several reasons, unless you absolutely have to, I don't recommend this option. There's plenty of other ways to resolve it without getting to that point, and you're going to see a long-term impact on your credit. You're gonna it's just psychologically, you don't want to necessarily have to have a foreclosure on your record. Just there's so many ways to get around it, especially right now, especially in this market, and especially with banks having, I think, at least to an extent, learned their lesson from the Great Recession. They are not in a hurry to foreclose on people, but if it gets to that point, it's still in the state of Michigan, the process is they can't even initiate any kind of proceedings until you've missed your third mortgage payment. So in essence, you've got 3 months before they even start any kind of foreclosure proceedings. And at that point, once they do, you enter into what's called the redemption period. And in the state of Michigan, that's 6 months, as long as you're residing in the home. If the house is vacant, they can shorten it down to 2 months. But if somebody's residing in the property, so you've got the first 3 months where you haven't made any payments, and then you have 6 more months where they can't really do anything, because that gives the redemption period basically means that during that period of time, you have the ability to get yourself out of foreclosure. But what that's going to take generally is you're going to have to come up with the money to pay off your entire mortgage balance, and all the court costs and legal fees associated with it. So it's relatively rare. It's happened, but it's not something that happens with any kind of great frequency. And I guess you could refinance out of it, but if you're to the point where you've already, you're 3 months behind on your mortgage, and you're staring a redemption period down in a sheriff's sale, realistically, you're probably not in a position to refinance either. So, I'll throw that out there, but it's really, really unlikely that would be the case. But at any rate, so with that strategic default, so now we're 9 months down the road. You are at the end of the redemption period. At that point, now the bank can initiate for eviction proceedings. So depending on which jurisdiction you're in, that could be anywhere from another month to, it could be 6 months. Depending on how backed up the court dockets are, and they've been pretty backed up because we had an eviction moratorium for almost 2 years. So they're still working their way through that. So you can buy yourself at least a year of not making payments in your house. But at the downside on that is, at some point, and you're probably not going to have a whole lot of notice as to when it happens, the court officer is going to show up on your doorstep, pop your door open, padlock it, carry all your stuff out onto the street, and that's it. And then they're going to roll. So I would like to avoid anybody from ever having to experience that. I saw that way too many times 15 years ago. It's not a great situation for anybody, even the people that are expecting it, even the people that know that it's coming. When it finally happens, it's not pretty. So if I never see that again, that'll make me very, very happy, which is part of the reason why I'm making this video, because if there's anything that I can do to help you avoid that exact scenario, I'm going to do anything I can to make that happen for you. So these are your 6 basic options when you're starting to get to the point where you're having a hard time making your monthly payment. So I would say start with one and work your way down. Hopefully we can avoid getting to the point where you're doing a deed in lieu or doing a strategic default. It happens though. So, you know, if that is the case, obviously, again, reach out to me anytime with any questions whatsoever. There's no fee, no charge. I'm here to help you guys. You know, anything that you tell me will be kept confidential unless you tell me otherwise. So, you know, I've got a lot of experience in this area of real estate, so I can kind of use that to help people not have to make mistakes that you know, people learned the hard way from back 15 years ago when the whole, you know, real estate market collapsed. And again, the most important thing to remember is these banks, they don't want to foreclose on you. They don't. You know, it's a bad situation all around. They don't want to be, you know, putting people out on the street. You know, it's costing them a lot of money to foreclose on each house. And, you know, essentially, once they have to start those proceedings, at least in the state of Michigan, I know every state's a little different, but in Michigan, you know, they've got to hire an attorney. The whole thing has to go through the court. So they're basically paying, you know, 6 months worth of legal fees. They're mailing stuff out. They're paying their employees to call you, mail you, to try and set up usually to set up some kind of a loan modification. You know, it's a lengthy process. Once they get the house, you know, once they get the house back, you know, once the judge awards them the house, now they have to evict you. They got to pay a court officer. They've got to pay to trash the house out. They have to pay agents to put the house on the market and sell it. All that stuff costs them money, and then they end up selling the house generally for less than what's owed on it anyway. So they're taking a loss like the whole way. So they don't want to do that. They don't want to put people in a position where they have to be, you know, be put out on the street corner or on the curb. I mean, the whole thing's just an ugly experience. So, you know, it doesn't help anybody, especially the bank that's foreclosing on you to do that. So, hopefully this video helps, you know, to avoid that from anybody having that experience again. But the most important thing to remember is that you're going to have to be the one to act. Like, it's up to you to initiate it. Otherwise, you know, you're not really giving the bank a whole lot of choice. Like, again, they're not going to call you, you know, out of the goodness of their heart or proactively and, you know, say, hey, you need some help. You know, it's on you to call them and work something out. So I know that can be intimidating. You don't know who to call. And again, I can help you out with that. No problem. Happy to do it. So anything that you need, just let me know. So I hope this video was helpful. And again, if you ever have any questions, reach out to me at 586-491-5622. Call or text me anytime. Email me, dwerenka@m1realty.net. Leave a comment down below. We'll get to it, no problem. We'll take care of answer any questions you guys have. And if you'd be so kind again as to like this video, subscribe to the channel, and most importantly, share this video out to anybody that you think will benefit from it. Just sharing this out gives me the opportunity to get in front of people just like you who are gonna benefit from this kind of information. And I always, you know, try to put out relevant, informative content once a week. So until next week, guys, thank you so much for watching, and we'll talk soon.